Why you should not be trading every day. Every trading coach will tell you to be disciplined. Stop over trading. You understand? Have patience. And you have been hearing all of that, and they are right. But they are giving you the right answer to the wrong question. You understand? The reason you shouldn't trade every single day isn't a willpower problem. It is a mindset problem. It is a mathematics problem. And once you understand the math, the discipline takes care of itself. Today, I'm going to show you with numbers why trading every single day is statistically working against you. You understand? And what a high probability approach actually looks like in practice. So point number one, I'm going to start with edge. What is edge? What edge actually means? Let's start with the concept. Most traders misuse the edge. Traders throw this word around loosely. I have an edge, I have an edge. But do you actually have an edge? Edge isn't a feeling. It isn't a pattern as well. You spotted 3 times. Edge is a mathematical expectation. It is the average amount you start to make or lose per trade, calculated over a large sample size. The formula is straightforward, right? Expected value equals your win rate multiplied by your average winners minus your loss rate multiplied by your average losers, right? It is simple. If you are forcing trade every day, here's what happens to that formula. Your win rate drops because you are entering lower probability setup. Your average losers grows because you're entering without confidence or without confluences. And your expected value, your edge turns negative. A trader with genuine edge doesn't trade every day because the market doesn't produce high probability setup every day. Forcing a trade on a low signal day doesn't just produce one bad trade. It corrupts your entire statistical samples and makes it nearly impossible to measure whether your system actually works. You understand? So we are going to point number 2. Let me show you point number 2 now. Point number 2, we have what we call variance. Variance is your hidden losses, you understand? Here is where it gets dangerous. In the short term, variance will lie to you. You can execute a fundamentally flawed strategy and still be profitable for days, even weeks. The market is probabilistic, not deterministic. This means your randomness will sometimes reward bad decision. And when it does, your brain records that as confirmation. This is working. You understand? You'll be feeling happy that you are making money, right? This is precisely why so many traders blow accounts they were previously profitable on. They were never truly profitable. They were within the noise of variance, and eventually the math caught up with them. You understand? So the professional approach is to evaluate decision over a minimum of 50 to 100 trades, not by outcome of any single session. You understand? When you trade every day, regardless of market conditions, you are not building a track record. You are generating statistical noise that tells you nothing meaningful about your actual edge. Real performance data only emerges when every trade in your sample meets the same defined criteria. You understand? The moment you start forcing entry rather, to stay active, you have contaminated your data. So let's go to point number 3, why so many traders face in the market. Point number 3, structure doesn't cooperate with your schedule. You understand? The market operates in a distinct phase, which is trend, consolidation, and expansion. Not all phases are tradable. With the same strategy, and critically, not all days produce any tradable phase at all. On a trending day, price moves with conviction. Structure is clear. Entries have definition. Risk is manageable. These are the days you trade. On a choppy day, low conviction day, price oscillate without commitment. Every breakout phase, every pullback reverses unpredictably. These are the days the market is transferring money from impatient traders to patient ones. When you sit down every minute, when you sit down every morning, right, with the intention of placing a trade, you are forcing a decision onto a market that may have already decided it is not doing anything today. You understand? The professional reads the environment first and only proceed if the structure supports a defined scenario. This is where the if then frameworks becomes essential. You define your strategy, you define your scenario in advance. If the market breaks this level with conviction, then I have a valid long. If it fails to break and reverse, then I have a valid short. If neither condition is met, there is no trade. The third outcome, no trade, is not a failure. It is the correct execution of a rule-based system. So let's go to point number 4 now. Selectivity is the strategy. Yes, you heard it right. Selectivity is the strategy. The traders who last in this industry are not the ones who worked the hardest in terms of screen time. You understand? They are the ones who understood a principle that takes most people years to internalize. Inactivity, when the condition don't meet your criteria, is a position. It is the correct position. You understand? Your job is not to trade. Your job is to identify the specific repeatable conditions or pattern under which your systems has a positive expected value and to act only then. You understand? When you reframe trading this way, the question should I trade today disappears. You understand? It becomes, does today meet my criteria? And if the honest answer is no, you close the platform, protect your capital, and move away. You understand? One high quality trade per week executed within a proven system will outperform 5 mediocre trades per day over any meaningful time horizon. The math guarantees it. Stop measuring your effort by how much you trade. Start measuring it by how precisely you execute the system you have built. This is what separates speculation from a genuine, reputable methodology. You understand? So with this, I will leave you with this few points and make sure you join the Telegram community to learn more about the market. You understand? See you next time. Peace out.